Hi, everyone. Dale Pinkert at TradeGATEHub. I want to start off with the follow through that we're getting in the metals. Yesterday, I talked about the breakout over this important downtrend line and also talked about not chasing it and being patient for a pullback, which we had. Okay, so you always can look for some type of pullback, some type of fib ratio. This was gold after it made its high, so about $20 pullback, and that'll mean a lot, finessing entries in there. Same thing happened in silver. And in fact, silver's flirting with the breakout. The gold had the breakout. Silver could today, but we need to close where we are now. You see, yesterday we tried to break out over this neckline and pulled back there again. Be patient, buy pullback, so you don't have to jump on a sharply higher opening. Give some of the day traders a chance to give you a better edge on an entry and in a position. And one of the topics of discussion happening right now with the way gold has been acting has been that it's been rallying with a stronger dollar, right? So a lot of people have not seen that for a while. Normally it's debasement and a weak dollar that is jet fuel and the lifeblood of a precious metal rally. And at times, which what we had after that inflation number, you could have both the dollar and the gold going together. And there have been periods where they've both gone up and down together and opposite of each other. So that's why it's so important, even though you look at correlations, that if you're trading gold, the heaviest weight you give is not what the dollar is doing, because you would do that if you're trading the dollar, right? But if you're trading gold, you want to have the gold, you want to be trading the gold. So there's a dollar and there's gold. So they're both unique instruments to themselves. Okay, so the way I look at gold now is, if you're not long, I just can't chase a market like this. What's really going to be important, should we get any pullback in gold, is that it holds the 1830 level. Everyone see that in the room? Yeah, happy Veterans Day to the veterans and their families who gave so much to us. So, no matter the politics, you have to be for the troops, because these are men and women that would do things that most of us would run away from. So I'm always in awe of people that have that type of character. There's no greater love than someone to lay down their life for a brother and sister. This is just money. Okay, guys, I mean, someone put that in perspective for me by just talking about Veterans Day today. All right, so we have the dollar and the gold moving together. I wouldn't be chasing gold. I wouldn't be chasing silver. One of the rationalizations is US dollar yen, which achieved my target to the downside. I was looking for 1265 and it got to 72.5. And I've been talking about that for about 2-3 weeks, even talked to Tim, that I thought the yen could pull back to this 12.5 level, which is, what it did. And then it had an impulsive move yesterday after the inflation number. I thought that this would generate some kind of pressure. This is what I mean about correlations. In fact, this is one of the reasons why I didn't get long, is because I didn't think the US dollar yen was finished. And I still don't think it's finished. And I think we're going to see levels above 116 in the end. This was a pretty powerful day. I don't know if it's going to distribute and sell off again. I'd look for new highs. I'd say that there's a ton of buy stops here. I think there are people top picking the yen right here that will have to be rinsed out of the market on a stop hunt, and that we're heading above 116 on that. Now, for many months now, since I've been on TradeGATEHub, I've been talking about a 95, $96 index, maybe 97, but I called this blue line that we're, between here and here as the battleground, because this is going to be the battleground of whether or not this is just a bear market rally or is there something else going on, like a liquidity crisis, and third world countries with their debt denominated in US dollars are really going to be put under strain if we're going to blow off and head up towards the upper 90s. You can make a case for 97.5 just using this 94 93.5 breakout that we had. Here it is. So I was talking about it. So from these levels, 89.60 to 93.50 would give you 97.5, but I think that 618 back from this level comes in right around the 96 level. So the dollar is really going to tell the story for the year. I think that we peak in the dollar into the month of December. And so you guys know, if you went back on my videos when we're trading down here and even down here, that I felt there were too many dollar bears and that they would be squeezed, and they're being squeezed. And then we would find out about the major trend. We're going to know whether or not this is going to be a big melt up to the upside. I actually think that we're going to turn down in the dollar. In fact, I think it's the easiest thing for the US government to sacrifice right now with all the debt they're running up. It won't do much for the inflation picture because nominally things will cost more with the dollar weakening. So we're approaching this battleground. I think we're there next month. I also talked about that bears feast on Thanksgiving and the bulls on Christmas. And that was in regard to stocks. And we're getting a little bit of a negative week. It's an inside week. Daily makes this market look vulnerable to me. And I just thought a natural price for the S&Ps to pull back would be the highs that we made in September, about 45.5. So that's another 100 handles from here. And perhaps we accomplish that by Thanksgiving. Because why? Because the bears, before they go back into hibernation, which that happens in the winter, which is in December, the bears come out of their caves and they want to have one more good meal before they hibernate. So I think they're going to have a little snack. I'm not looking for a crash here. In fact, I'm looking for it to be, fairly shallow and then blow off again into Christmas. So we'll see what happens if that plays out. Let's get to, this is also posted on FX Street. So I want to get specific about a few things here in the euro. So I had this line drawn for, I don't know, about 6 months. It's a major breakout line that we had in the euro. And, now it's coming in right around 113. And then I also have another speed line that's coming in around 113. So this was an average, this was the place. I even remember talking to one of my associates here on TradeGATEHub.com and said long-term, I was looking for, that was up here, looking for 113 euro to be the pullback to buy. So I think we're headed there. One positive thing I could say about the euro now is, I called that bottom in euro pound here, guys and ladies. And we had this nice little 2-week rally. Here's the daily. So euro's making new lows, right? But EG isn't. So I actually think that a relative strength buy would be when euro breaks, say, another 140 points, that we'll put in higher lows in euro pound. And I think that's a constructive sign for both euro and even a more constructive sign for euro pound. So in the days, a week or so away, I'm going to be looking to buy euro pound for the next push up towards 87. Believe the low is in. You know, all the way down in the euro, all the way down, even though it was a grinder, euro pound was making new lows, right? That's not happening at new lows right now. We're in fact 410, we're 160 pips above the low. So that's something put on your laundry list. Let's not call it laundry. Let's call it your Christmas list. And since the shelves are going to be empty, you could fill up a bag of euro pound on a pullback. Okay, so I'll be around. I'll let you know. We also had this nice rally in USDCAD. You know, why can't this have been, like I said, you know, we were talking about it down here at the 61.8 level. Some people were looking for one more jiggle to 22. That sure not looking likely to me after this breakout. How about 131? And even though Mark Chandler says that the Canadian is not a petrocurrency, we had a pretty negative down day yesterday in crude. We're trying to get a recovery here and holding this, I think it's a 200, the 200 moving average on the 4-hour TF. But if we start taking out this line, I'm really surprised we didn't make a new high, but I've been long using a bearish crude ETF SCO, and I still think oil has a chance to fail, really get underway into Thanksgiving, and it's trading a lot like the S&Ps. See, the S&Ps have tried to rally, but you're getting this stair step type decline. No crash, just corrective action. This was a confirmed high, right? So here, every day I'm here, I'm going to point out confirmed highs and divergences until you guys get it. So this high right here in the S&Ps was confirmed. What does the RSI, the real simple implicator, imply about the high that we had in the S&Ps? What does it imply? And my producer, if you want to answer the question on YouTube, you could go ahead and do it. Anyone in main chat have the answer for what this implies when both price and momentum confirms price by making a new high? What's the implication for that? 5, 4, 3, 2, 1. Okay. When markets make new highs, OB? What's OB mean, Jasper? All right, well, markets rarely peak when price and momentum confirms the price. No, see, we're going to have to do an RSI school. It just means it's a confirmed high, and markets rarely peak when the highs are confirmed. Okay, I think it was also confirmed on the daily. Yeah, look at this. So I'm telling you guys, this is not the high. Even if we break 100 handles from here, this type of momentum isn't just going to turn into a bear market. We're going to need it to come off, and then on the next high have a lower reading in the RSI on multiple time frames. Okay, so here's the 4-hour, that too confirmed. Look at that reading, 86. So, you know, we're going to make new highs. This high here in this is just a correction before a blow off. That's my view. So this high was 47.19. So I know some technicians that are looking for about 4,800, right around there, 47.90. We'll see what happens up there. But here again, this is a lesson. When markets make a new price high and it's confirmed by momentum, and I use the RSI, you know, just a 14 RSI, 14 day. So what's the actionable analysis? It didn't tell you to short it up here because there was no divergence. What's the one message it gives you? that this high most likely is only a high and not the high. So I should be looking for a break to buy that's going to challenge this high and take it out. I don't know now whether or not when that happens, or I'll even say if it happens, whether or not we're going to stay under 70 on that advance. I suspect some type of divergence on those highs up there on larger time frames. Okay, so there's your lesson in the S&Ps. So you know, your worst performer has been NASDAQ, because NASDAQ doesn't like higher yields. So, you know, we saw what happened in the yen yesterday. I remember talking about yesterday and saying, if you're long notes or bonds, that I'd be out of them. And this is what happened to them after the broadcast. They sold off pretty dramatically. And as 10-year yield shot up pretty dramatically. And I think that by year end, we could be taking out these 170 highs and trading up near 2%. So that's another reason. Let's see, you know, if the metals can survive those yields up to 2%. It's still most likely real yields are still not high enough to depress them, but I still want to see where the metals are at should and when US dollar yen get up to 16.5 or so. That's another 300 handles. So that's important to me. Oil, like I said before, it's trying to rally here. Could we rally and make one more high? It's possible. I'm looking for this along with the correction in the S&Ps. And it might be something as foolish as a release from the Strategic Petroleum Reserve, something I've been talking about. You know, I've been playing the short side of crude for about 3 weeks without, you know, there have been nice scalps, but nothing's turned into a position for like, you know, $7-8. I think this still has a possibility for that to happen. And some other things I wanted to cover. Look where the VIX stopped, okay? And this is something in December I'm going to be looking at when the S&Ps are at about 4,800 or shade under. I want to know where the VIX is. You know, it might be time to be looking at just a highly spec call option position, go out to June. Also, you know, there are a lot of NASDAQ stocks, as I've been pointing out all the way, and was correct on the forecast that NASDAQ would make a new high without some of the old darlings, and that definitely seems to be happening. So I'm going to keep our eye out for the VIX, guys. And even the gold shares coming out of the hole pretty good now. Really almost looks like a breakaway gap in gold fields. There's GDX, similar, not as positive on Yamana. Not as positive there. Yeah, they're all looking pretty good. It's not my style to chase anything. So again, I'm going to see what happens to metals with yields going up to 2%. See where they're at in December. And I think that's about all I have to cover today. So again, we're waiting for about 113 in the euro, which should be, you know, 96 in the dollar index. Still bullish the dollar. We're entering a period where we're going to be in the battle zone between 96 and 97 for whether or not this is going to be the best dollar short in many years, where you could have a move like this from wherever we peak. RSI should give us some market tells when momentum is starting to shift. The other market tell is going to be euro pound not making new lows, as a dollar and euro. Dollar makes new highs and the euro makes new lows down towards 113. The S&Ps are, you know, just a stair step type decline to previous highs, and Canada looks like it's turned for a move. Maybe we have equivalents here, you know, and that was 10. It could take us up to 131, 132 Canada. And I think that goes hand in hand with a pretty good break in crude. The other reason I like crude is it tried to negate last week's 2-week reversal, but this week the 2-week reversal comes in at 83.28, so we're quite a bit underneath it. And in fact, it was a pretty good pivot. 80 right here, when it got through here, it rallied and squeezed up towards 85. Then when it got back underneath it, it started to break. So if we're over 328, tomorrow is the end of the week. You can't look at a weekly candle until when? Do you look at a weekly candle on Thursday and say, you know, we have a verdict? No. So, well, I'll have to wait till tomorrow. I suspect that we're not going to close back over the off number, but you know, you have to be ready for everything and anything. And with that being said, I hope that what we're doing here by putting out these videos, I hope you realize we really have no axe to grind. We're not trying to get a subscription out of you. And, you know, we're not going to sit here and just dictate what you do in the market. It's a very collaborative environment. I've been started inviting my trader friends to come in here and post. So you guys have some decent content. I think you get some decent ideas from both Michael and myself, and invite you to join us. Go to the main chat room and post your charts and share with us. And I really believe in communities because they support each other. We each only have 2 eyes, so you're bringing many minds together, and that's how you could get the math. Like Michael and I, 1 + 1 = 11. That's what happens when things are symbiotic. So everyone, have a great end of the week. Hope we're adding value to what you're trying to accomplish. It's not easy, and you can't be lazy. So with that being said, don't just count your pips, count your blessings. Have a great rest of the week, and I'll be back with you Monday. I have a special guest lined up for next Wednesday. There's a very big following, and he's been real right about the S&Ps. He was talking 4,700 when we were many hundred of handles underneath that, and he's risen. I think he's moved some targets up, and it'll be great to talk to Dave. Twitter handle David H. Contrarian, so it'll give you an idea. So that's a wrap. Take it easy. Remember, pips come and go, time is gone forever. Make it count.